This video is going to be a quick leverage trading tutorial on BloFin. Those of you that have been watching the channel know that I absolutely love this exchange. Not only have I had my money on there for years, but also I do find that they have some of the best features in the industry when it comes to leverage trading. And before we jump into the tutorial, just remember that if you'd like to sign up with me on BloFin, you do have that first link in my description down below. If you click this link, it'll onboard you onto the exchange. And of course, with my link, you can get some pretty strong bonuses, especially as it pertains to trading fees. Depending on how much you deposit and start trading, you'll get reduced fees on this platform, which is crucial if you want to be a serious crypto trader. And on top of that, I do have something special for you guys. Everyone that signs up to BloFin and joins me on there can get access to my free Telegram community where I share my own personal trade setups in this market. So if that sounds interesting, make sure to join me. Let's jump right into the tutorial. First of all, let's just go over the basics here. What is leverage trading? Leverage allows you to actually use more capital than you have. For example, if you have $10,000 that you're prepared to trade with, you can use leverage to amplify how much money this represents, and therefore you can get more profit, but also you put yourself at risk of faster drawdown. So, for example, if you have $10,000 and you use 5x leverage, this essentially means that you're opening up a $50,000 position. If you have less capital, same thing applies. More capital, same thing applies. Now, in terms of leverage, what you want to look at here is the fact that you have between isolated and cross margin. Isolated means that whatever you risk for that position remains as is, that is it. For example, if I enter a trade on isolated mode, I am only risking whatever I enter with. So that means that if I use $5,000 for a trade, that is the most that I'm willing to risk. However, if I go on cross margin mode, this essentially means that if I use $5,000 for a trade, it will use my entire balance to ensure that I could stay in the position as long as possible. And so the drawdown could be far more significant. I know a lot of seasoned traders that just stick to cross margin because they have so much capital that it's basically impossible for them to get liquidated. However, if you are new to trading or you have a little bit less capital, I would highly recommend to always stick to isolated mode. This way, you know exactly what you're risking for any given trade. Now, next step here, we have limit, market, and of course, we have the trigger option here. Limit essentially means you can choose where you'd like to enter long or short on a crypto asset, and if the price hits that level, your order will be executed. Market, however, lets you enter the position at the current market price immediately. So, for example, if I go to the asset tab, you can see a bunch of different crypto assets that I can trade, and let's assume that I want to trade Bitcoin. So I click on the first one, Bitcoin. Now, you can see here that I am currently on limit, but I want to execute a market order, which means I want to get in immediately. So, let's say that I'd like to drag this bar, and you can essentially see down below how much you're risking. For example, in my account right now, I have around $420,000, and the more that I drag this bar, the more capital I would be using for a trade. Now, we can also talk about how much leverage to use because BloFin gives you the option of up to 150x leverage. Honestly, I would never recommend using that much leverage. But what people tend to get confused about when it comes to leverage is it's not so much about the leverage, but rather how much capital that you're risking. Let's assume you have a $100,000 crypto portfolio. If you only want to use a max of 5% of your portfolio per trade, you can use $5,000 on isolated margin, and you can use as much leverage as you want to get more potential upside. However, you put yourself at risk to get that drawdown much, much faster because you're amplifying your position. Typically, I like to recommend below 10x leverage if you are a regular crypto trader. So let's assume right here that I'm going to use 10x leverage and I confirm. Now let's pick my position size. So here you can hover over and see that I can trade on 10x leverage as much as 33 Bitcoins. That's a massive position that I certainly do not want to trade on this account. So what I'd like to do is actually see how much dollar I am using for my trade instead of the Bitcoin valuation. So you click on this tab, then you can click USDT, and of course, I can choose how much USDT I'd like to use. So let's assume for this given trade, I want to use 30,000 USDT. Here, I want to go long on Bitcoin. You click buy long, and there you go, you have entered your position. Now this of course enters your position, but we cannot forget about the take profit and stop loss functionality. So take profit. Let's assume that Bitcoin is essentially just chopping around in this range, and I think that the next move for Bitcoin is to actually make it to the top of this range, which is right around $116,000. I don't think we're going to lose this level, and so what I would do to execute a trade here is, first of all, I would select how much capital I want to use for this given trade. Then I would click on this little check mark here, take profit, stop loss. So my take profit, I can essentially set at $116,000. So let's assume that's the take profit. And then my stop loss, because I don't think that Bitcoin will make it back below $109,000, can be 109K. That's how I want to protect my position. So here you can see that if I were to execute this trade, my potential profit is around $1,500 and my potential loss is around $800. This is the general gist of leverage trading. Now with the limit functionality, you can do the exact same thing at a pre-selected price. So let's assume I want to go long on Bitcoin. Here I would type in what price do I want to execute that long at. I think that if Bitcoin drops down to 109.7K, that's the point in time where I would like to go long. And therefore, I will enter this in this box, and then I can drag this a little bit. Let's assume that I will be using around $30,000 in capital on this trade. Then I could click long, and there you go. If I click confirm, you can see that it's in the open orders, and I can execute on this order automatically if the price hits this level. But I will go ahead and cancel this order. Right now, the only active position that I am currently in at the time of recording this tutorial is what we call a Bitcoin dominance long. Now, I won't bore you with all the details, but basically in crypto, if Bitcoin outperforms the rest of the market, which usually happens, Bitcoin dominance continues to increase. And this is what I meant about BloFin having awesome features, because I am currently long Bitcoin dominance. And you can see that right now, I am currently sitting at around $14,000 in profit on this trade. And so it's been quite excellent to hold this, as I anticipate Bitcoin will likely continue to outperform the rest of the market. The cool thing with Bitcoin dominance is that even if Bitcoin drops less than altcoins would drop, my Bitcoin dominance trade will continue to be in profit. I don't want to confuse you with the details here, because this was supposed to be a very simple leverage trading tutorial, but I had to share this because BloFin is one of the only exchanges that actually allows you to trade Bitcoin dominance. Now, if you want to trade different crypto assets, all you have to do is go on this tab and you can type it in under futures. They have USDTM, USDCM, and of course CoinM, where you're trading the actual coin. This is the futures tab, and this is the tab that I use mostly for all of my crypto trading. However, they also have copy trading functionalities. You can see here that they have a pretty interesting leaderboard showing the top gainers, and you can essentially set up your account in a way where you can copy trade these people. Now, in my personal opinion, I like to trade the market on my own, and I don't like to copy people. And typically, when you see massive P&Ls like this, just to be fully transparent, they don't tend to last that long. And so you need to be careful with who you copy. Just because you see that this guy, for example, over the past 30 days has a 600% ROI, it doesn't mean that these results will continue in the current market conditions. So be careful if you want to execute copy trading. For me personally, I trade USDTM futures because as soon as I get out of a position, money is in my pocket immediately and I don't have the underlying crypto asset. By money, I mean stable coins, of course, USDT. Another super interesting feature that BloFin has that not all crypto exchanges have is what we like to call dual mode. So if you go in the settings here, you can see that I clicked this icon right here and you go on position mode. Right now I am currently in one-way mode. But this dual mode, or hedge mode as we call it, allows you to go long and short on different crypto assets. So what this would mean is, for example, let's say that if I zoom out on the Bitcoin chart and I entered a big Bitcoin short, which means that I'm betting on the price going down around these levels, and Bitcoin continues to drop and I'm seeing some massive profits. However, I think that Bitcoin is bottoming out and I would like to get some exposure if we move up from here. Well, you can remain in this Bitcoin short and you can also go Bitcoin long at the exact same time. Now, naturally, these positions would be canceling themselves out if you keep on holding on to your short as the price reverses. But the idea here is that you can secure some profits on the way down and you can also secure some profits on the way up. This is one of the most effective ways of trading this market, in my honest opinion, and I have done it time and time again. I like to hold my positions because I am more of a swing trader, and therefore I can maintain my positions by going both long and short depending on the market dynamics. If this sounds confusing to you, no worries. And if you're interested in trading, just remember you do have that first link in my description down below, which brings you to BloFin, and you also have access to my community should you decide to sign up and start trading on there. I'm happy to explain everything in there. But the point is, so much functionality on this exchange, and of course, we do have some very, very nice bonuses. I know so many people that have started leverage trading in crypto and have completely transformed their lives, but the thing that you need to consider here is that it's not all hype. You need to execute proper risk management. And this brings me to the next portion of the video. First and foremost, at the beginning of the video, I talked about cross versus isolated margin. I would highly recommend that you don't stick to cross margin, especially if you're a new trader. And if you do use cross margin, make sure that you always have a stop loss in place. To put it simply, stop losses protect your capital. No one can be 100% accurate with their trades. There are some losses along the way, and therefore you need to minimize those losses by having proper stop losses in place to make sure that if the price moves against you, you don't lose all of your capital. Now, something else you'd want to consider in terms of risk management, which I'm a huge advocate for, is to never risk more than 5% of your total trading portfolio. That means that if I have $100,000 in my account as an example, I will never risk more than $5,000 on a given trade at a time. This allows you to make mistakes and you can easily make your money back should you lose it with a couple of trades. I know too many people that go ahead and enter a huge position with 50% of their account or with 100% of their account. And the thing is, sometimes they get lucky and they double, triple, quadruple their crypto trading account, but then inevitably they get one loss and their entire account gets wiped out. This is why, regardless of the winning streak that you're on, I would highly recommend that you only ever risk 5% of your trading portfolio. And to most serious traders, 5% is even considered aggressive. Usually my standard rule of thumb is between 1 and 5%, depending on my conviction in the trade. For example, I just want to show you this because this is something that's extremely interesting to me and one of the best features that BloFin has. So you can see this coin YB. It's a newly listed token. If you've been watching my YouTube channel, you know that I like to talk about shorting, so essentially betting on the price going down on these newly listed tokens. Now, I didn't personally trade this one. However, if I would have, it would have been classified as a high conviction trade. And so if I would have shorted this token, I would have likely used 5% of my trading portfolio. Now, we can get into the strategy of shorting tokens later on in a different video on my channel, but the point is, if you have a lot of conviction in a given trade, even if you think it's a 100% win, only risk 5%. I cannot make that clear enough. Too many people risk way too much money in this industry, and it can work out for a certain amount of time, but afterwards you end up getting burned. Use proper risk management. And on the topic of new cryptocurrencies, that's one of the reasons why I choose BloFin to trade on, simply because they're one of the first exchanges to ever list these tokens. And so as soon as some celebrity or someone goes ahead and launches a token and there's supposed to be a lot of hype, these guys are always first. And so I can trade that token immediately, typically before everyone else. That gives you a huge edge in this market. And that sums up my quick leverage trading tutorial on BloFin. Just one last point before I let you go. I have this standard rule of thumb where I like to have a much bigger spot portfolio than my trading portfolio. For example, my rule is 5x. That means that whatever capital I'm willing to allocate towards trading the crypto markets, I have a spot portfolio 5 times that size. The reason I do this is because it allows me to operate in the market stress-free. For example, if I have a big Bitcoin portfolio that's just sitting on the side and I'm not planning on selling anytime soon, but I also have my trading portfolio, even if at the absolute worst case scenario, I don't end up making money with my trading portfolio, I am perfectly content with my spot portfolio. Now, something to consider, it doesn't need to be 5x, but in general, I would recommend at least 2x. That means, for example, that if you have a trading portfolio of $100,000, I would recommend having a spot portfolio of $200,000. When used right and with proper risk management, leverage is literally game changing. This has absolutely exploded my own personal capital, and this is one of the many reasons why I have successfully made it in the crypto industry. And just a reminder, if you'd like to join me on BloFin and start trading on this wonderful exchange, you do have the first link in my description down below. And if you're not a particular seasoned trader, but something like this still interests you, make sure to sign up, and then you can join my free Telegram community where I essentially guide you through the market on a daily basis. And that's it. I hope you enjoyed the tutorial. Let me know if you'd like a more detailed one in the future, and I'd be happy to go ahead and film it. I'll see you in my next video.